The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Gloomy skies in the northeast of the United States, but also gloomy skies for crypto. And joining us now to discuss the crypto markets is Dan Gunsberg. He's co-founder and CEO at crypto options trading platform Hxro. Morning, Dan.
Good morning. How are you?
Well,
could be better.
More like how are a lot of people? Yeah, I mean, I'm fine. I'm diversified. I don't care. But a lot of people, unfortunately, are all in some things like crypto, or all in on tech stocks, and they're taking a beating, and it's getting worse. So, can we talk about that correlation, if you will? We've asked a lot of people what's causing it, and do you expect to see more of it in the next few weeks? And what does that spell, even on the short term basis for crypto, specifically Bitcoin and ETH, but also the alts?
Yeah, this has been kind of going on for a while now, where you have this super high correlation between NASDAQ equities and crypto markets, and I think some of it is just the overall incoming of more professional trading firms. More algorithms are just tied to kind of a risk-on, risk-off environment. And with what's happened in terms of the Fed recently and over the last few months, and in their fight to, in their efforts to fight inflation, having a little bit of the QE unwind, or a lot of the QE unwind, is helping to drive risk assets lower, and crypto is in that bucket. So I do think that at least for the next few weeks, if not longer, you're going to continue to see that, and where we go from there, we'll see.
So, since you guys are covering options, obviously you're seeing things a little bit differently in terms of how investors are positioning and how they view risk. So right now, particularly in the majors, Bitcoin and ETH, how are they positioning themselves? And are any standouts, anything unique that you're noticing in the books right now?
Yeah, nothing too unique. Obviously, last week with Luna, with the Terra Luna unwind, there was a pretty dramatic spike in volatility, and oftentimes that's met with kind of a repositioning where you're going to end up shorting volatility. I think also, and maybe if I'm kind of taking a step back and looking at the broader picture, Bitcoin peak to valley is off 60% from its November highs. Ethereum is off somewhere roughly in the same area. Take some other large blue chips like Solana, which is off over 80%. This is pretty normal for crypto markets, and we've been in basically a crypto bear for the better part of a year now. And so I think we kind of have to ask the question of, are we starting to see a bottom? Is what happened with the Terra Luna unwind a sign of a bottom? Usually in markets, you have some type of event that causes, that more or less would put a bottom in. And I think what you end up seeing is you have an event like this, you get a big spike in volatility, and then the market somewhat kind of quiets down. You often go into these periods of extremely low volatility, kind of a summer doldrum, and a lot of the market is positioning for that now.
But are they selling the volatility right now? Are you seeing signs of that in terms of how the trades are initiated? Are they doing a lot of these spreads that basically sell the volatility in either puts or calls?
Seeing more of that now than I was a couple of weeks ago, that's for sure.
So they expect kind of more tepid markets going forward, but even if it's positioned to the downside? Okay.
Yep.
Earlier I mentioned that Pantera Capital as well as Galaxy Digital issued these letters saying that, hey, we were able to get out of Terra Luna before the collapse. So I'm wondering if you could maybe give us, which is interesting because retail holders, once again, are left holding the losses and are being exit liquidity. So I'm wondering what kind of differences are you seeing, if any, between retail and institutional traders?
Look, for for every comment of Pantera being able to exit, and I'm not invested in Pantera. I have no idea what the reality of their book looks like. But I also know plenty of funds who were caught holding on to Terra Luna as well, and other ones that kind of in the midst of this unwind were also, I think, potentially trying to save it. So they may have put themselves in a position to compound their losses. So I can't really speak to that one way or the other. I do think it's somewhat of a tragedy is what happened. I've never been a supporter of algo stablecoins in general. After 30 years of being in traditional financial markets, I kind of have looked at these as complex derivatives, as a kind of a tangential complex derivative, and any complex derivative that has a peg attached to it it seems very primed to be depegged. And I don't think that, at least where we're at in crypto markets, although it is a very innovative emerging technology that we're working on, it does leave itself very susceptible to things like this. And I'm certainly, as somebody who's been in the space for 6 years now and is an active builder in the space and doing things that we're building to be sustainable and impactful over the long run. These are the hiccups that we often go through, and for some way, shape, or form, every cycle we go through this, and every cycle we come out of it with some advancement in technology and moving the industry forward.
All right, Dan, we got to end it there, but thank you for joining us. Sorry, there she is.
Yeah, sorry, I was muted. The alts are also taking a hit. There's kind of red across the board. And, the general consensus in the crypto industry is like, they'll all come back. But do you think there are any alts that might not come back, that just might not bounce back from this, that this is kind of just like the beginning of the end for them?
Terra Luna, for one, yeah.
That's
Beyond that,
interesting you say that, because they just released their revival plan, so you don't think that'll last?
It may. I mean, this is crypto, so we kind of live in the tail of the distribution, and we'll see what comes out of it. I think maybe a little bit of greed might be driving that, and some of what Rune said in the previous segment. But yeah, I think it needs to. I think it's time to move on. I think there's several. There is a good amount, and this kind of again happens every cycle. Like we go through this like innovation trigger. This is something like referred back to as called a Gartner cycle for emerging technologies. It's kind of a meme pattern that happens in crypto often, and you get this technology trigger, you get this large move in innovation. It's very reflexive. It fuels a bull market, and then you get tons of new projects that come out of it, and then the market turns over. And when the market turns over, and it could be something completely related to those to crypto itself, or it could be a more exogenous factor like the Fed or interest rates, and then you get an unwind, and in that unwind you end up with a lot of projects that that maybe were initially built with good intentions, and maybe weren't built to be sustainable, or didn't have product market fit, or they run out of money. Lots of different things can happen, and they go away. And I do think a large percentage, each cycle you see a large percentage of these various digital assets basically vanish. And no different than, look, I traded through the whole NASDAQ boom bust in late 90s, early 2000s, and very similar story there. I think this is just the story of technology and innovation, and when you have markets associated with it, you get high volatility, you get a lot of turnover, you get these big run-ups, you get these big sell-offs, and eventually out of that comes some plateau of productivity, and you move the industry forward.